Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets.
Euro-dollar. A lower but still indecisive spinning top yesterday, which was also a fourth bearish black crow. It was yet another consecutive close below the small March-based dark blue descending triangle pattern made up from the overhead July 2017 to November 2018 head and shoulders neckline, currently at 109.44, and a small March-based uptrend, currently at 109.08, as well as below the neck at 108.20 of the small March-based double top. This move lower was all due to the overhead resistances provided by the dark blue head and shoulders neckline of the July 2017 to November 2018 move and the 50% Fibonacci line of the January 21 to September 22 move, both at 109.44. It was also a follow-on low from the earlier important bearish belt hold pattern. I can't stress how important that pattern had been. Belt hold patterns are one of the more successful of all the patterns, with a success rate of nearly 7 out of 10 times when they occur. This set up some potentials below for the ascending triangle, with a primary target X at 107.60, which is not too far away, and a secondary harder to reach target X1 down at 106.95. Now the primary target X is down at the first support below the market, which is the May 2020 low at 107.66. And the secondary target X1 is just under the support of the 50% Fibonacci line of the July 23 to February 25 move at 107.09. Meanwhile, the double top has a primary target X2 down at 107.53 and a secondary harder to reach target down at just about the same level as target X1. On top of all that, last week the market made a weekly key reversal down at the top of the recent market. This, at the least temporarily, lays at rest the idea of the market contemplating a possible annual key reversal pattern. However, I would still continue to keep an eye overhead at the September 2024 high at 112.13. You see, if prices exceed that, then we have set up the conditions for this market to make that rarest of patterns a possible annual key reversal. However, we have a number of significant resistances ahead of that, starting with this 50% Fibonacci line and then the shallow dark blue neckline. Please note the 50% Fibonacci line had previously capped a reactionary rise back in November last year. Now looking below, it should be noted that between the primary and secondary targets we have the flatlining gold long moving average, currently at 107.26. So far today, a further move lower, making a new low for this week, but then a pullback up, though we haven't exceeded yesterday's top side as yet. Cable, aka sterling against the US dollar. An interesting pattern, or should I say patterns, yesterday. It was day 2 in a 2-day bullish meeting lines pattern, but it was also a low down outside day, if only just. This is the lesser cousin of the key reversal pattern, and in this case it should be seen as bearish. Plus, after all that, it's also an indecisive spinning top pattern. Overhead, we still have the secondary harder to reach target X1 up at 131 even for the breakout from the January to early March dark blue ascending wedge pattern. In the way, we have the November 2024 high at 130.47, whilst below we have the November 2020 low at 128.52, which acted as a support 2 weeks ago. And then the flatlining gold long moving average below that, which is currently at 128 even. As I recently said, I would continue to keep an eye overhead at the September 2024 high at 134.34. You see, if prices exceed that, then we have set up the conditions for this market to make that rarest of patterns a possible annual key reversal. However, we have a number of significant resistances ahead of that, starting with the low of December 2020 and the high of July 23 at 131.33 and 131.44 respectively. And so far today, well, a higher open for Tesla that has since turned higher after the close, over the close for the last 2 sessions. It's moved up over that close for the last 2 sessions, though we are still within yesterday's range. US dollar against the Japanese yen. a bullish open and close white Mariposa yesterday, and a third bullish white soldier. Now, I did say yesterday that the previous 3 sessions could be seen as a possible 3-day bullish morning doji star pattern, but I thought at the time that might be stretching credibility a bit. However, that hasn't stopped the market acting as if they were. Prices pushed up through and closed over the immediate overhead resistance of the 50% Fibonacci line of the July 23 to July 24 move at 149.61, but were stopped dead by the next resistance, which is the 50% Fibonacci line for the whole of 2024 at 150.76. Overall, the market is countering some of the more recent bearish patterns whilst remaining within the larger big bearish item, and that is the bright red July 24 to January 25 bearish Andrews pitchfork. Now, this pitchfork shows the bearish angle of attack of this market, and we are right now moving towards the upper time, currently at 151.89. Yet it should be noted that we at the same time will be countering a smaller, nearer term bearish pattern, the oft-mentioned early December 24 to late February 25 rounded top pattern. Now, we had formed the rounded top pattern itself and even started the exploitation of the downside, but we've stopped 2 weeks ago after reaching the primary target area for this pattern. It now puts at risk of retirement the secondary, much harder to reach potential in this case, the much harder to reach potential down in the 138.40 zone. Now, I have taken the decision for now not to assign it as a target, because after all, it is so far down below the 2024 low in September last year that it would bring up all sorts of questions if that happened. The main one being, what would we form? Would we form a very rare annual key reversal here, key reversal down possibly here? In the meantime, we have another more immediate pattern to deal with, and that is highlighted in pink on my daily chart. Is an early February to date descending wedge pattern. This pattern had been the very recent driver low and helped the rounded top reach its primary target. However, we have seen only slow and limited exploitation on the upside so far. Now, I have previously laid out some potentials for this pattern higher out of the descending wedge pattern, and that's of a primary target X in the 153.59 area and a secondary hard to reach target X one up in a 156.68 area. Both of these targets are outside the bright red bearish Andrews pitchfork and may raise questions as to whether or not to finesse the bright red bearish Andrews pitchfork into a shallower bearish shift pitchfork, which I would obviously do, but which would be passé if prices suddenly turned higher. Now, so far today, a small move higher over the 50% Fibonacci line at 150.76, but not by much, before a pullback down within the 150.76. Well, actually within the main body of yesterday's range. US dollar against the CNH, the offshore Chinese yuan, a third bullish white soldier yesterday, enough for me to morph the previously breached acute late December 2024 to late January 25 bearish Andrews pitchfork into a shallower bright red bearish shift pitchfork for the same move. Prices closed up over the bright green upper trend line of the January to March 24 ascending triangle, currently at 725.63, but the rise was stopped dead by the dark blue downtrend, currently at 726.68 of the January to March 2025 descending wedge pattern, currently 720.93 to 725.63. Additionally, a little beyond the dark blue downtrend, we have the declining green short medium moving average, currently at 727.68, and the rising mauve medium moving average, currently 727.72. Now, this move higher counters any bearishness apparent from the whole late November 2024 today action, acting as a double top, even an Adam and Eve type pattern. Now, so far today, a fresh move higher over the dark blue downtrend, such that I will now have to start considering topside targets for the dark blue descending wedge pattern, especially if prices can close anywhere around here. However, prices have so far not managed to achieve or managed to stabilize actually over the dark blue downtrend, and that's an essential item. US dollar Brazilian real, a third bullish white soldier yesterday, and a first close back up over the gold long moving average, currently at 573.71, as well as the December 2021 high at 575.78. However, the market was stopped dead by the dark blue mid-December 2024 to date downtrend, currently at 577.22. Now, I might finesse this downtrend a little higher next time, as it doesn't really take into account the highs from late February and early March. It nevertheless is the immediate overhead resistance. Above this is the October 2020 high at 580.70, and then so far the unreconstructed bright red uptrend, currently at 581.09, which I would need to finesse lower down, plus the green descending short medium moving average, currently 583.13. Now, in the even larger picture, we are set up for the market with a week left to go for the market to make a possible monthly key reversal in March. Thus, if we close on Monday the 31st of March either over 591.77 or under 567.49, then we'll be on. Anything in between, it would have the lesser outside month pattern. At the moment, we have moved up from a possible monthly key reversal down to a lesser outside month pattern. And looking below, we have the support of the lesser 38.2% Fibonacci line at 567.07, which is the gateway to congestion from June to October last year, between roughly 565.07 all the way down to about the flatlining purple, neckline of the June to September last year head and shoulders continuation pattern, currently at 540.53. There are not many nearby defined support lines below until you drop under 545 even. Finally, the market last week achieved the primary target at 563.35 for the drop down below the large early October 24 to mid-January 25 rising expanding wedge pattern. Now, the harder secondary target X1 down at 541.95 is still live, and though I am starting to wonder if I should maybe retire this pattern or not. US dollar against the Mexican peso. A combined immediate countering bearish engulfing pattern, plus a bearish open and close black Maribozo yesterday, after the previous session's bullish opening white Maribozo. It was indicative of the rejection of the nearby overhead resistances provided by the bright red lower bull channel line, currently at 20.32.67, of the very gently rising early November to early March 25 bull channel that had become a rectangle top pattern. Plus, a little further overhead, the flatlining mauve medium moving average, currently 20.21.07, and green short medium moving average, currently 20.40.12. Now, below we still have the significant support of the previously highlighted congestion zone between 1987.96 to 1991.31. However, in the larger picture, these all still ties in with the move down below the bull channel that has morphed into a rectangle top pattern. Now, the primary target for this pattern at 1985 has already been reached, but we still have open the secondary harder to reach target X1 down at 1948.90. Now, looking elsewhere below, we have the April 2022 low at 1971.68. That is just under the gold long moving average, which is currently at 1973.74. So far today, the market seemingly capped by the August 2024 high at 1925. August 2024 high at 20.04.45, and a small dip lower, though not much to write home about as yet.
Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.